Everybody understands you got to start somewhere. So you've got now 3 years of track record of double-digit returns. A feeder fund, so it's a strategy built solely to come into one fund. You can very easily design your fund to mimic everything so it matches up to the fund you're going into. And in that strategy, you can more curtail to how the capital is coming into the feeder fund that you're designing. For a fund of funds is a different strategy where you might be creating a fund and you're going to pick multiple other fund managers or investments that you're going to go into. And that is a little bit more broad strategy and it's diversified. And in that strategy, you may diversify into originating things yourself at some point as well. And so these are both strategies on how for any asset manager to essentially get started and get a track record leaning off of other fund managers before they go out and do something on their own. It is enormously challenging to launch a fund and launch a fund for the first time ever, and haven't done the investment side or the fund management side. You're basically going to get your friends and family is the only ones that are going to commit to that. What I also want to tell people is that when you're looking for track history, don't forget that nobody is really looking back to the amount of assets under management during that track history. They're looking for performance. That performance is a metric. Let's just say that you were able to successfully do double-digit returns since inception, but your inception amount was only, fund assets under management was only 100,000 for the first year, and the next year 500,000. But the third year at $1 million. Well, you have 3 years of track history doing double-digit returns. Nobody is really that concerned that the amount of assets under management was small back then, but you got the track history. It does matter. Scale does matter, but everybody understands you got to start somewhere. So you've got now 3 years of track record of double-digit returns. So there's another aspect to a feeder fund, is that you need to design that strategy in a way where the investors are not, there's no reason for them to go around you and go directly into the fund that you're touting that you're going to go into your feeder fund. And so that gets more nuanced on how that's done, and I'm happy to talk with people directly about that. So some of the reasons that people are creating feeder funds is that some people are looking to build their own track record as an asset manager. And if you have no track record, it's extremely tough and challenging to get those initial investors. But if you are investing into another fund that has a track record, you've eliminated that. And so you can start your fund by making an investment into another fund that has that track record and build that assets under management for your feeder fund, and then start growing that from there. Eventually, you will have a track record. Eventually, you will have experience as being a fund manager. Now, remember, there's two sides. There's being the manager and raising the capital, but you also have making investments. And so we're trying to separate those two things and build on just the fund manager and the asset manager and fund administration, and not have to work on the investment side of it. Eventually, you can start doing your investments as well once you've built up the track record on being the manager. We have some as small as $1 million, and there's no minimum to start that, because you're going to start it with a small amount of capital and you're going to keep adding to that feeder fund. So eventually it's going to build up over time. But we have large ones in the tens of millions of dollars as well. And they all have different strategies or reasons that they're doing it. One of them was to aggregate capital from internationally, and they had their own systems of how they did that, and they handled everything and brought it all in through a U.S. tax ID entity. And for this particular group, it's a great story because they actually do have extensive experience as an equity asset manager and making equity investments. And so when we spoke with them, we said, look, you've got this entire base of investors, but you've probably maxed out on their equity allocations, but have you considered going back to them for a debt allocation? And they said, let's see. And they just simply sent an email, and the response was so overwhelming that was our first one that we launched. This has become a unique thing, and we have helped these groups put together those structures. We've helped them to align how to structure that and how to set up their fund administration, their legal docs, their auditor, and things like that. But we have very small ones, and we have quite large ones. And so if this is something that interests you, please reach out to us, and we're happy to kind of give you the range of those different levels. And if we go down that road with you, we do have programs where we have a way of helping to mitigate some of those costs.